What's up, YouTube fam? This video is my gift to everyone who has been supporting the journey thus far and everyone who wants to learn option selling as if you were a complete beginner, right? So I'm going to take it step by step and give you guys the exact formula for how to really make good money selling options even if you knew absolutely nothing, right? So first things first is you have to pick stocks that you're going to sell options on. So as you guys see here, I have just like a built up watch list. I don't really check this even that much, but really what I do is I just try to get options, or better yet stocks that are just big sized stocks, right? High market caps, billions and billions of dollars. And, just like to have a big list, and ultimately, you have to just let the stock that you're going to do the option on kind of find its way to you, right? Like I follow a bunch of stock trading pages on Instagram, and they'll post news about stocks. They'll post, big moves, right? And these are all catalysts that are going to create higher premiums, right? So the first thing is just being, well versed with a bunch of stocks on your watch list, and ultimately staying up to date so you can know, when stocks are making big moves, specifically big ones, right? The second thing you're going to do is have the earnings reports, right? So this week we took Clean Spark because of earnings. We had this on our watch list because of earnings, Chewy on our watch list, and DocuSign, right? So you're looking at earnings reports because, again, these are causing IV spikes, right? So the premiums are inflated. So if you look at Oracle right now, right, our current position, you see we have it at $4. For this position is just, you're not going to get this unless there's something leading up to, the news, some sort of reason why premiums are jacked up. Now, how did we come up with the 182 strike? First of all, we're just going to look at the option chain, right? And when you look at it, they're giving us a 73% chance of winning on this trade. I already like my odds, right? And then once I pull up the chart data, I see this big gap, right? A gap like this most likely isn't going to fill immediately. Most gaps actually end up filling later, right? So when a gap like this was recently created, more likely it won't fill. And if it does fill, it's more likely it's some sort of draw, and then, there's some sort of retracement back up. So no matter what, I feel pretty confident. I don't think we're going to take these lows and then take this gap. I personally don't see it happening. If it does happen, then it does. But on a stock like this, which is a $500 billion market cap, I don't see it doing something so wacky. So we'll see, right? But ultimately, the reason why we like selling puts, right, is because we pretty much win in 3 different ways, right? We pretty much win in all ways, right? So if it does something like this, right, from the earnings plays and never actually moves, we win, right? If it does something like this, right, where it just shoots up after earnings. Let me make this further. Sorry, there you go. If it does something like this, right, where it shoots up, we win, right? And then last but not least, if it does something like this, we're still going to win, right? Because the premiums are going to lose a lot of money just from the time decay, right? And don't take these charts seriously, right? These are just hypotheticals. But the premiums are going to lose so much money that if it makes a move like this and then comes back up like this, these $4 premiums, $3.95, are still going to be worth money. And in that case, I'll just find a way to exit, and that's it, right? Like no harm, no foul. Because ultimately what happens is these options lose value, right? So since we're selling at $3.95, basically, unless it does this, right, just absolute shoots down, there's always going to be a possibility to make money, right? Because again, even if it comes below our strike but then bounces back up and just bounces around here, these puts are going to be losing value faster than that would be happening, right? So the best case is it shoots up, because if it shoots up, then the puts will be worth almost nothing by Tuesday. At that point, you can get out of the play and go all in on the next play, right? Which at the moment, and this is not, necessarily going to be forever, but at the moment, GME is our next play. So assuming that after close Monday, it shoots up at open, we would take all of it off the table, the full 400. Again, if it does any of these other scenarios, right, if it stays here, if it bounces around here or shoots down, then we would have to also manage accordingly and would not be able to take 100% on Monday. Probably would have to either wait for Friday or just find a way to get out, where we can get some money. So the point is 3 out of 4 things that are going to happen are going to be in your favor, right? And that's not even including the fact that our strike is a 73% chance, right? Like even if our strike was all the way up here, it would still be 65 and it would still be the same principles. And that's why we're picking lower strikes, is because it's just giving us more leeway. But we also don't want to go too low, because if you go too low, right, the premiums just aren't worth it. So you have to find that perfect balance. And the way to do it is to use what the option chain is telling you, along with just when you look at the chart, let's get rid of this. When you look at the chart, you see that, you're below at least some sort of important level, right? If we're at 182.5, it's like we're below the full daily. We're at basically the bottom of this gap. Like these are very important levels that aren't going to just break easily. So when you combine all factors, you're giving yourself a real chance of winning every trade, right? Like you're literally giving yourself an 80-90% chance of winning. And that's not even including, again, the fact that you can get out of the position early, right? Like the option chain is showing you what's going to happen by expiration, but it's not even including that you can get out of the play early and then get in the next play. So that's really the full course. It sounds so simple, right? It sounds like it's too simple, but ultimately it's not about doing it one time, right? Like if we go to the history of last month, it was a lot of trades that we took. I mean, it wasn't like it was like one lucky play and we just made, $4,000. We built it up brick by brick. We sold for 1,000, bought back for 20. Sold for 330, bought back for 150. Sold for 430, bought back for $2. All right, like we have tons and tons of trades that have made us this $4,000 over the last 30 days. And that's what it's all about, right? Like anybody can get lucky in the markets and have one win, but what's the only thing that's going to actually make you feel comfortable in life is consistent wins. And that's what we are bringing to the table with this strategy. So I hope you guys enjoyed this video. These are the plays we're in. This is the full course. I guarantee that you're not going to find anybody that can teach options this efficiently, this quickly. So comment your thoughts. Let me know if there is anybody. But if not, let me know that you learned a lot from this video. I tried to make it as simple as possible, as quick as possible, as easy as possible, because that's how you do it. Simplify tough things, right? Like anyone can take something complex and make it sound complex, right? And confuse us all. But what really leads to progress is taking something complex and simplifying it. So that's all for this video. Maybe I'll work on something soon. Otherwise, you'll hear from me again Monday. I hope you guys have a great weekend, and peace.